The secret to getting a high APR on your cryptocurrency investments is pretty simple. It's about utilizing the liquidity as a service business model when you're basically supplying liquidity to a decentralized exchange, and that decentralized exchange pays you when they make money from trades happening on their platform. Now, I can break it down really quickly. It's very easy to understand. So, there's decentralized exchanges like Uniswap, Orca, and more. And when a trader goes to swap one asset for another, they're paying a fee. So if they're going to swap, let's just say ETH for AAVE, say they want to swap 2 ETH, get AAVE, they would be paying a fee. See, in this case, it would be about a $16, $17 fee. Now, what's really cool is that a percentage of this fee gets paid out to the liquidity providers that are actually supplying the ETH and the AAVE for this transaction to take place in the first place. And this is also great for people who are already holding ETH and holding AAVE, because they can put their already existing assets up into a liquidity pool and get paid out in earnings for just holding on to these assets. Now, of course, there is risk to this, such as impermanent loss. I'm not a financial advisor. I'm not saying what you should do with your money. But anyways, if you're excited for me to show you how you can possibly get very high APR on your cryptocurrency, make sure to subscribe and click the bell to turn on post notifications. Anyways, we can head out over to DeFi Llama. And if you go to DeFi Llama, in the yield section on the left, you can go ahead and go to the pool section as well and see a ton of liquidity pool opportunities. But there's a problem here. On DeFi Llama, you can't do a lot of due diligence into these opportunities. You can't see the liquidity distribution, you can't see the volume history, etc. So we like to use other software. So on DeFi Llama, on the left, you can go to yields and you can go to pools, and you can explore over 12,000 pools they're tracking, a ton of liquidity pool opportunities. But there's a problem here. On sites like DeFi Llama, we can't see in-depth due diligence, and we can't go ahead and look at past volume history, liquidity distribution, and really zoom in on it. We also can't simulate our potential returns before we even make these investments. So it's not too smart to only use sites like DeFi Llama. I like to go ahead and use another software like Metrics Finance. If we go to metrics.finance and launch it on our browser, we can go ahead and click Launch App. Now, there is a free and paid version, but in the link in the description down below, you can claim a free 30-day trial. Anyways, we can go to the Discover section at the top and explore a ton of exchanges and networks. Here we can set our calculation range. I'm going to change it to about 14 days so we can see the past 14 days of data. So we're going to select what exchanges and networks we want to look on. So I'm going to select Uniswap, Orca, SushiSwap, Radium, Velodrome, and Aerodrome. I'm not the biggest fan of Aerodrome and Velodrome, even though I do have an Aerodrome position. So this is more going to be a last resort. So for now, I'm really going to be looking at the Uniswap positions, the SushiSwap, and the Orca and the Radium positions. And for select networks, I'm going to select Ethereum, Arbitrum, Optimism, Base, and I'll select Solana for now. You can of course select more or less as you'd like. But now we have 1,842 pools to sort through. Now that's a lot, so let's filter these down. In this video, I'll also be building a sample portfolio as well, so make sure you stick around. Now scrolling down, we can see a lot of different opportunities. We can see the fees APR, we can see the TVL, we can see the daily fees, the TVL, average daily volume, etc. This software is very in-depth, so we got to add some parameters because we got to filter this almost 2,000 pools down by a lot. So let's look for pools that have higher than 25% APR, or let's just say 20% for now, and less than 150% APR. There's a couple reasons I'm putting lower than 150% APR. I don't want to look for pools that say 500% APR. That realistically won't give me that in the long run. My personal investment strategy is to try to find pools that offer consistent and long-term returns. So I don't want to be just hopping in something for a quick high APR and then getting out of it. I want to be in it for the long run. So I'm looking for these hopefully consistent pools. I do sound sick. I am getting over COVID and a cold, so drop a like for me. And anyways, scroll down and we can see these opportunities. We can take a look at USDT to wrapped Ethereum, wrapped ETH to Uni, etc. I'm going to look at this wrapped ETH to USDC at the top. It says it's doing about 45% APR. We can simulate it in a new tab. So now we have our assets USDC to wrapped Ethereum. Now we can scroll down and pick our range. Now I love zooming out on the calculation range to see how this pool has played out throughout the past 60 days or even 100 days. Now, a really cool feature of Metrics Pro compared to DeFi Llama and other websites is that you can actually zoom out on the calculation range. So this is sweet. And scrolling down, we can see how correlated these assets are. Well, it's a regular crypto paired with a stablecoin, so they're not going to be correlated at all. But anyways, I'm going to zoom back in on the calculation range, look at it with about a 22-day calculation range. Now we can find our range. Now I'm going to select my range here and make a calculated guess of where I can deploy my capital and keep it in range. So like I said, want to have my passive income as hands off as possible. So I'm going to make my range a bit broader. Yeah, I could probably squeeze out some extra APR if I make my range tighter, but that's not my goal here. So if we're looking at a range of about, let's just say 2,917 to 4,274, we're looking at about a 55% APR on just these assets. So I'll go ahead and tighten it up a bit. Let's go here. Let's lower this and tighten it a bit up. Now we're looking at about 59% APR. Sweet. And I'm just going to squeeze the top a bit closer. All right, now we're at 60% APR. So this is solid. Now this is with a 22 calculation range. We can go ahead and change this to the last 14 days of data. And now it's saying we'd be getting a 63% APR almost using the past 14 days of data. I'm going to change this back to 20. And it's really important you scroll down and check the volume history. Make sure you're doing your due diligence on these pools. The volume history here is looking great, but sometimes you'll look at pools and positions and there'll be days with almost no volume. That's a huge red flag, so watch out for that. Now, in order to get a more accurate simulation as well, we could move our current price toward this more liquidity. So if we're moving it toward this more liquidity, it's saying we're doing about a 29% APR, and that probably is more realistic on these assets in particular since it's Ethereum paired with a stablecoin. But this could be a solid position, a blue chip to stablecoin position to add to the portfolio. So I'm going to go ahead and set my deposit amount to $10,000 for the sample simulation. Then I'm going to save it to my portfolio in the top right. In DeFi Excel, we go much more in depth into these liquidity providing strategies. I'm just giving you a high level overview here. Take a look at one of our members, Anas. He put in about 56 grand and he's up about 4,500 bucks, and he would only be up 3,369 if he didn't put in his assets to a liquidity pool. But since he put them in with our strategies, he's up over $1,000 extra. And on the right, you can see his 30-day prediction is over 21 grand. So that's really cool to see. Congratulations to Anas. If you want to check out DeFi Excel, it's in the description down below. I'll leave a link. So now we can look at some more positions to add to our portfolio. Scrolling down, we can look for some higher APR positions. So look, here we have the perfect example. Wrapped ETH to AAVE right here. Remember I was talking about that over on Uniswap before? This position's at about 142% APR with a almost $20 million TVL. Let's go ahead and simulate it in a new tab and check it out. So first thing, I'm going to move my current price toward there's a lot of liquidity to try to simulate the most accurate return. And now I'm going to zoom out on the calculation range to see how this pool has performed. And I'm going to zoom back in. And look at this. You can see back in June, the price was about 42 bucks. Now it's at about 10 bucks. So it's pretty volatile. This could be a position where every week or every few weeks you have to rebalance. Just keep that in mind. Now, zooming back in, I'm going to set a range of about, let's go down. So I'm going to keep the low end at about 8 for min price. And for the max price, I'm going to raise it a good amount. Let's go. I want to be pretty broad. So if I'm keeping it at about 14, here we go. It's saying about 71% APR. Yeah, I could put it to something like 12 to try to squeeze out extra APR, but I don't want to have to be readjusting my position 24/7. You know that. So scrolling down, we can see how correlated these assets are. Now they are not correlated at all. And let's look at the volume history. Some days are have a lot of volume history, like here showing 25 mil. Here it's showing 4 mil, but I'm not worried about these low days since even on the low days, it's still millions of dollars in volume. So I'm going to go ahead and add this one to my portfolio. First, I'll add the $10,000 sample deposit amount. And I'll also change the calculation range to 20 days so it's matched with the other one. Let's keep scrolling for opportunities. And when we're scrolling and see opportunities like wrapped ETH to DAI on Uniswap, and if you don't know what an asset is, such as DAI, I'll show you what you should do. So you should look at the position if it's something you want to look into since the returns are looking appealing, simulate it in a new tab, and then find the asset you don't know about. So DAI, for example, if you haven't done your due diligence into this asset, don't know much about it, head on over to CoinGecko and paste in the asset. So now we can see DAI. It looks like it's somewhat of a stablecoin, and you can see the market cap, a bunch of information about it, and you can also go to the website. So this is a great place to start doing your due diligence on DAI or whatever asset you're looking into. So from here, I would do my due diligence, find out what role this token plays in the DeFi ecosystem, etc. And say I like what it stands for, say I want to take on exposure to DAI, I could then go further with my range selection. So I can type in the $10,000 deposit amount, and let's do the same thing we did in the last pool. Let's zoom out in the calculation range, zoom back in. I'll set it to about 20 days, and let's change our range. Need to change the current price to where the liquidity is here. So let's go ahead and do that. And even with a pretty broad range, we're looking at a very solid APR. Look at this, about 100% APR. And this range is pretty wide. Scrolling down, let's check the volume history. It is a bit strange. We have some very high volume days, then some low volume days. So I'm probably not going to look at this token because look, on this day, there was only $1,000 in fees paid out. This day it was only $453. So I'm going to close this and start looking at other assets instead. Remember, I'm only trying to invest into pools that I really see a future in. That one was pretty up and down. Here we have GMX to wrapped ETH, 76% APR. I'm going to go ahead and simulate this. I'm not totally sure what this asset is. So let's go ahead and put it in CoinGecko, and I would do my due diligence on it and see what it is. So it's about $284 million market cap, almost worth 30 bucks. We can hand it over to the website gmx.io. Immediately it's asking for my Solana. So it looks like it is a decentralized perpetual exchange. Interesting. I can go ahead and read about it. And it looks like the token is the utility and governance token for the GMX exchange. So see how by going to the CoinGecko, you can easily start your due diligence for the assets you want to look at. So I'm going to set my $10,000 sample deposit amount, and I'm going to scroll down, look at the volume history again. So this one is looking much better than the last one. We still have some lower fee days, but the other pool was showing much lower numbers. So I would be pretty comfortable in looking at this one further. I'm going to change my current price to where there's more liquidity, and then let's zoom out on the calculation range here. Okay, we can zoom back in, let's take a look at it. So let's set up our range. I'm going to be pretty broad again. And look, if we're getting weird numbers for our min price like 0.00, 0.01, we can swap the assets. So instead of GMX to wrapped Ethereum, it's wrapped Ethereum to GMX like this. And now we have some normal numbers here, as you can see. So let's go ahead and drag down our max price. Keep that about there. With this broad range, it's pretty broad. We're getting about 81% APR. If we tighten up the bottom a bit, 83%, this looks solid. Now these assets are pretty correlated, 92%. That's what the 0.92 means. So that is great to see a correlated position finally. We can go ahead and add this to the portfolio for later. So I'm gonna hit save to portfolio. Now look, I found ENS to wrapped Ethereum on Uniswap showing about 135% APR. Let's go ahead and simulate that in a new tab. And of course, I want to check out what this ENS asset is. So we can go here to the search Ethereum name service. We can scroll down and go to their website. So it says welcome to the new internet. Now ENS is more than a protocol, it's a commitment to a better web built for everyone. This is pretty cool. Your ENS name is anchored in Web3 but works across the internet. It's your identity, simple, memorable, unmistakably yours. So instead of basically having a complicated hex address, you can just have a mynewName.eth and it'll be easier to send crypto to them. Now this seems pretty interesting. It seems like this would actually have utility across the DeFi ecosystem, so it's definitely something that I want to look at. So it looks like everyone could claim their own ENS name. This is interesting. So let's go back to Metrics Finance and see what type of returns we could be getting if we were to supply this asset into a liquidity pool. So I'm going to set the current price over to where the liquidity is. This sounds good. And let's zoom out on the calculation range here. Okay, then we'll zoom back in. I'll zoom to about 20 mark again. I'm going to swap the order of the assets again. Here with this pretty broad range, we're looking at about 88% APR. Let's scroll down, look at the volume history. There's a lot of money in fees, thousands per day. So this is solid. And these assets are 89% correlated. So this is another correlated pair, which is great to see. I'm going to go ahead and save this one to my portfolio. Now, I can go over to the build section up here and see the pools that I've added to here. We can see our pools, we can see the sample calculation range along with the deposit amount, etc. And with a $40,000 deposit amount, we're looking at about $75 estimated in fees per day according to Metrics Finance. So with that 40K, we'd be estimated to get about 27K per year in fees, which would be about 2.2K per month. And remember, before you get into any liquidity providing positions, make sure you say to yourself, do I want to take on on exposure to these assets, such as GMX or AAVE, and make sure you do due diligence into the assets. But if you do want to take on exposure to the assets, you would go over to Uniswap or whatever decentralized exchange the assets are on. In this case, the wrapped Ethereum to AAVE, it's on Uniswap right here. So you'd go to Uniswap, you would go to Explore and then Pools. You would type in an asset to look for the pool. Now we see Ethereum to AAVE, wrapped Ethereum to AAVE. Let's see. So we're looking for Ethereum to AAVE with the 0.3 fee tier. Perfect. Should be this one. Let's try to confirm it. So here it's showing 10.9 TVL. Let's go back to it. Check out the TVL of this pool. Great, showing about 10.9. So we can click on that here. And from here, we could actually deploy into the pool. You would just go to add liquidity and supply your assets. There's also a track feature on Metrics Finance where you can check the earnings you're generating from your liquidity pools, and you can also calculate your divergence loss or loss if there is any. And by joining DeFi Excel in the description, you can claim a free 30 days of Metrics Finance. I hope this video helped you. Make sure to subscribe and hit the bell to turn on post notifications if this video did help you, and click the video on the screen. It's a really good one, so you should check it out.